Some of the most skilled and knowledgeable traders that I know have never made it in trading. And it's not because of their lack of knowledge. It's not because of their lack of understanding. And it's not because they didn't have a strategy. They failed because skill and knowledge isn't enough to survive in day trading. So if you've ever blown an account knowing exactly what you should have done, or watched yourself break your rules that you promised you'd follow that time, then this video is for you. I'll explain why it happens and why so many talented traders never get the chance to become profitable. So most traders, especially beginner traders, believe that knowledge equals success. They learn more strategies, they learn more indicators, they learn different trading pairs. But the truth is, many struggling traders already know enough. You understand the market structure, you know risk management rules, you know how to use the indicators that you use. You've backtested and you've studied for months, sometimes even years, and yet your results don't match the knowledge that you have. And that's because trading isn't an IQ test. It's not an exam. Trading is just a self-control test, because the markets don't reward what you know. Because if they did, everyone would be profitable. But it rewards what you can do under pressure consistently without bending or breaking your rules. And that pressure is the thing that makes every trader fail, even successful traders. Because in a calm environment, every trader can make the right decisions. But trading isn't calm. There's money on the line, your identity is on the line, and your confidence that you've built up is also on the line every time you take a trade. And that pressure, that is when logic gets replaced with your emotions. That's when you start closing winners early because you think the profit's going to disappear. You hold losers praying that they'll come back to break even. Or you enter late just because you don't want to miss out on that trade. Or you enter too early because you have FOMO and you just feel the need to be in a trade at that time. So it's not your strategy that's failing you here, but it's purely your emotions. And this is often why demo trading looks super good. It looks amazing. You're profitable 80, 90% of the time. But as soon as it goes on to real money, when there's real money at risk, you start to lose. And that's because of the emotions. That's because it's overriding your logic. And now you're not sticking to your plan. Now you're not following your rules. Now you're tweaking little things which make a huge difference. So unless the triggers of greed, fear, FOMO, and doubt are all controlled, your skill and knowledge in trading becomes irrelevant. It's exactly the same as knowing everything about an F1 car, how they work, the rules, everything. But if you've never driven and it never practiced in real life, you'll never be good at it. It's the same with trading. So now you know that your emotions are overriding your logic. This next thing, this is what truly blows your accounts. And that's your risk management. Because when emotions are running high, when you've got no logic, it's very, very easy to break your risk management rules. Because most accounts, they're not blown from bad entries. If you get a bad entry, you can widen a stop loss, or you can just get out of the trade. But they come because you're using too big of a position size. So when you use too big of a position size, you don't have that option of getting out of the trade or, oh shit, I've made a mistake. Let me just get back out of it. Let's get out the markets, let's reset. When you're using too big of a position size, that's not possible because you're already down too much, or you might be up, but realistically, every time you try that, it does go down into the minus. So bad sizing is a huge thing on why you're losing your trades. And even successful traders fall into this trap. Because if you take a loss, you want to increase your lot size. You want to get that money back as quickly as possible. So now you're just over leveraging just to speed up the process of being in down draw. Of course, being in down draw is never the best feeling in the world. So you over risk, you up your position size, and you're basically risking your account on one or two big trades instead of trading your plan. And that's the issue here, because to blow an account, you could be wrong multiple times. But as soon as your risk management goes out the window, all it takes is one loss to blow your entire account. So your risk is what determines the survival of your account. And survival is everything in trading. You're here to survive. You're here to protect the capital that you have. The profit that you make, that is just a bonus. Because every strategy has losing days, has losing streaks. Of course it does. So if you take one loss, throw the strategy out the window, throw the risk management out the window, you're no longer trading that strategy. You no longer have any edge in the market, and you are now just gambling. And if you're consistently doing that, you have huge inconsistency in your trading. And inconsistency makes skills useless. And this is why so many traders fail, because they turn up every single day and they're a different trader, because one day they're disciplined, consistent, and precise. The next day, they're just impulsive, emotional, and reckless with their accounts. So your good habits aren't stable. You don't enforce your rules consistently, and decisions depend on your mood, not the process or what the market is showing you. And yes, professional traders and profitable traders, they're not perfect. They take losing days. However, they're predictable. If they have a 60% win rate, they know out of 10 trades, they're most likely going to lose 4. So if they take a loss, it doesn't matter. They don't destroy the consistency that they've built up. So they take similar trades, they manage risk the same way, and they follow structured routines in and out of trading. Because consistency isn't about winning every single day, but consistency is behaving the same every single day. And without consistency, the skill of trading that you're trying to learn, it can't compound, it can't grow. You'll be stuck in that trough, in that trench for years. And that's what most traders go through. And the last and one of the most biggest reasons why traders don't make it in profitability is because of their ego and their need to be right. And I get it, you're sitting there and you're thinking to yourself, I'm not egotistical. Like that's not myself. I don't mean it in a way where you're arrogant. I mean it in a way where you have attachment. You have attachment to the need to feel right. And you refuse to accept losses. And you feel a huge discomfort in accepting that you made a mistake. So that's when traders move their stop losses. That's when they add to a position. That's when they hold trades long past their invalidation points, because they have that urge to feel correct. They're hoping that the trade will reverse and it will go back into profit, so they can get that feeling that they were always right. But guess what? You're never going to be always right. That is just trading. But a lot of you won't fix this, because being right all the time is your identity. And I get it, it's kind of built into us from a very young age, where you do the work and you get rewarded for being correct. But in trading, that's not how it works. In trading, everything could be the perfect setup and it could still go the wrong way. But then the next day, it will be the same setup again and it goes the right way. That is just trading. Trading is probability, and losses are part of the game. But refusing to accept the loss, that is what destroys accounts. That refusal, that ego that you have, that is what causes you to break every single rule. That is what causes you to be inconsistent every single trading day. And that is what causes you to throw all your risk management out the window. So what actually makes traders make it in trading? Because the traders who succeed, they're not always the smartest. They aren't always the most analytical, and they're definitely not always the most talented. But they all share one singular trait, and that's that they're hard to destabilize. They can take losses without spiraling out of control. They can stick to their rules when emotions are running high. They can think long term, where other traders, they think in the short term, and they protect the capital above anything else, because they understand something so important, and that's the market doesn't reward brilliance, it rewards survival. If you can survive the game, the trading markets long enough, you will see success and profits. So most traders don't fail because they can't trade. They fail because they simply cannot manage themselves. Because the skill, the indicators, the strategy, that gives you the opportunity to make money. But your discipline, your emotions, that determines whether you actually create the money and you enter your positions at the right time. So if you're serious about becoming a profitable professional trader, stop focusing so much on the strategy. The strategy is a system, and of course you need one. However, you need to be the kind of person who can execute that strategy while keeping your emotions, your ego out of the trade. Because at the end of the day, the traders who make it, they're the ones who don't quit. They're the ones who didn't self-destruct and they didn't let their emotions override their edge. So if this video helped you, please feel free to like and subscribe. I also have a completely free to join Telegram group purely based on risk management, psychology, and mindset. So if you want to join that for completely free, click the link in the description. That'll take you to my website. You can join the Telegram group from there. There's also a load of other free things for you guys to use and utilize within your trading. So thank you very much for watching, and I'll see you next week in a new video.